Happy Monday, traders. It's 8:02 a.m. Chicago time on the 22nd of February, 2021. This is episode number 1942, 1942. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, this morning we've got a market that is risk off. We've moved down a little bit. I wouldn't call it a market that is crashing or anything like that. It seems like any move down is considered a really big deal these days. The worst case here is the Nasdaq down 1.23% or 167.50. In real time, the market has continued to drop since this pre-market prep sheet was completed. Overall, it's looking like risk off is in control here. The flows are out of the equities into metals. Not seeing a big pop in the 30-year. The 30-year is holding at down about 3 ticks. And versus Friday, the 10-year's down a big tick and a half. And so we're not seeing flows into there. The dollar's off. The euro's strong up. The cable, the yen, and the Swiss are stronger this morning. Crude oil's leading the pack. Crude is now up 2.09%, or $1.24. Making its way above 60.50. The sell-off started right at the open of the European markets. I checked for news, did not see anything that's directly related to news, but overall, the markets just during the whole Asian session was not really holding positive prices very well. We ended up closing down on Friday, which actually was a surprise to me. We had a nice tag, a nice push up, and it could not hold, and it ended up selling off. So and holding lower. So we'll go over that in a minute. The key elements today are really we're seeing an increase in yields. The 10 years has come off a fair amount. Overall, interest rates are there's upward pressure on yields, and also Boeing is grounding its 777s after what was a video that made its way around social media, and that was trending of a United Airlines flight with an engine on fire, and parts of that engine landing in people's on people's homes and cars and in their front yards. So Boeing has urged airlines to suspend the use of 777 jets. Boeing, if you remember, had that huge problem with the 737 MAX, and now here's this disaster with the 777. There's clearly an issue there, and probably a shakeup coming. So that's where that is. Let's take a look at the overnight session. The overnight session has traded 362,000 contracts so far in what is a trend down profile, multi-distribution down profile. We have traded approximately 53 points and are holding steady near the low end of the range. The overnight point of control is at 38.75. The volume is quite high relative to what's normally expected. Inventory is about 65% short, and the market has tagged that 62 that I've talked about several times. It tagged it in the overnight session. The low is at 61.25. Let's switch gears here real quick and take a look at what was expected on Friday. On Friday, really the way we had opened up on Friday was a gap above Thursday's range. the expectation is for responsive selling to set up a base and push through this 31 area, 31.35 for a go at 45, which has a weak high. This is the normal course of events as we broke this one-time framing down in the overnight session. You can see that this isn't a very good trend line, but you can see that trend forming there. We have lower highs in the day session, lower high, lower high, lower high, and then we ended up breaking that one-time framing down in the overnight session and opening up here. And so the idea is it's likely to pull back and then continue higher. That's the expected behavior. Pretty good delta in the overnight session, pretty good delta in the session before it. So all indications were that any selling would be treated as a pullback with a buy bias being stronger in structured trades. This is not how things shook out on Friday. Here's what we've got. Let me turn this off. Here's what we got on Friday. We immediately got responsive. We opened up at 23.75 and then pushed to 26.25, and then we got responsive. Here's the prior day's high right there. Tested, pull back to mid, break right into the range, pull back to VWAP and mid again, break lower into range, pull back to mid and VWAP, break into the range. And then it's working its way to the prior day's point of control, which is what is expected once we get back in the range. We're likely to hit high probability of hitting the prior day's point of control, and then we get this strong push up. And to me, this looks like the end of selling, so I'm looking for areas to buy, get an opportunity here, a small little setup at 38.20 against mid VWAP and OS low. And what does that do? It gives us 4 points before falling back through, and it becomes a chop fest. We finally end up taking out the initial bounce high. So this looks promising. This looks like it is starting to make its way up, turning up. This is the impulse that was expected, turning up to challenge the 31, the overnight high. And once that's challenged, we expect that to continue. Well, not so much. Falls right through, puts in this wide rotation. And then from there, it's not able to recover at all. We end up on Friday with a double distribution with a point of control in the upper distribution inside of the initial balance. But what's happened here is on Friday, we ended up with a neutral extreme down day. Neutral extreme down day. And what this looks like from an auction perspective is the market kind of worked its way. Buyers worked their way to breach that first hour high, which takes quite a bit of effort. See, there's a fight all the way through, which generated this volume. And then once that's breached, we barely get through by a few ticks. We got through by 4 ticks. So we have a clear range extension. We fall right to the prior day's point of control, to the tick, 39.11 for a small bounce, and then continue to fall through, pushes through the prior point of control and low right here, and then continues to push, and it's not able to find buyers to take it back above the mid. Here's the mid again, couldn't get to it. Here's the mid again at the IB low, which was a nice setup short into the close. Couldn't quite get to it, and it finished at the low of the day with a weakish low. Weakish, not super weak, but a weakish low. And what this sets up, given the way we closed, this sets up weakness in the ensuing session. So if this had not been Friday, and if the market had opened at 5 o'clock my time here in Chicago, 6 o'clock Eastern for the next session, the expectation is probably an attempt to squeeze higher again at 3,900, but a continuation lower. And instead, we got that in the overnight session. By the way, Delta was all about it. Delta was negative throughout this portion here, was negative. See, when we made this peak, Delta was still below the zero line and remained negative throughout the session. There was just not much buying there. The 39.45 RTH high remains intact, and that's where that stands. So this brings us into today's session. So we open last night, Sunday night, we open in a gap up, slight gap up. We test higher and we push lower and close. We test back up to the prior session mid, but from there really isn't much buying going on. And we remain, something to pay attention to here, the mid, which is the blue, and the VWAP, the full session VWAP, which is the cyan. We end up staying well ahead of those two lines. We have a nice little consolidation right here, and it breaks right through. We shift the point of control down to the low end of the range at 28.75, and we're trading at this point of control for a while. We've created a kind of a wedge formation here. The expectation is it's likely to squeeze higher and then break the other side. Here's that 62, which I mentioned on Wednesday of last week. As we were pushing lower, the 62 was a key test area. It is the high, it was the all-time high for January, and we tested it by 4 ticks. We went right into 61.25, some single prints below at 58, but it tagged that old high to the tick and is holding steady. And the reason I think it's likely to rotate lower is because why not? I don't see anything here that says the market has found its buyers and is ripping up. It has basically had an impulse inside of an impulse and is flagging down at the low end of the range. In the low end of the range, it is getting some footing here. We see Delta kind of recovering a little bit, still negative on the session. Still recovering on the session, but overall we're staying well ahead of the session mid and well ahead of the full session VWAP. And to me, I've got to lean to the short side once the opening frenzy takes place and it does its kind of floundering and the buying on the open and all that stuff. Then we need to judge to see how does it hold this VWAP, how does it hold the overnight point of control, and does it start to breach lower and break this kind of uptrending line for this wedge for a breakdown into 61.25 to get us the overnight stat. The overnight stat, the other side of the overnight stat is at 39.14.5, which is a ways away. It's 40 points away. It can do it, but the path of least resistance, the easier flow of the water, so to speak, is down to the other side. And we have a fib here at 38% of this whole swing up from, I believe, 126, from 129, from the 29th of January all the way to the high. We have an RTH fib at 45 below, which is exactly 100 points below the day session high that we put in. So that's where we stand currently in terms of what we've got. What I'd like to look at next, of course, is a review of what we have on the daily. So look at this beauty here. We had high kurtosis, low range, pretty compressed 2 weeks ago with a point of control right in that 39.09. Do you remember this number? 39.09. Please tell me you do, because I've talked about it till I'm blue in the face. 39.09 close, around 39.09, around 39.09, around 39.09, 39.23.24 close. Then we push the high at 45. We come right back in. We close at 07, 06. We close at 09, 10. And the point of control for last week is at 09, and we're below it. So I'm bearish. I'm bearish now. Given this setup, I'm looking for intermediate term bearish. Delta making new lows, despite it holding the 09 region. To me, this looks like the market is just completely exhausted on the buy side. So to me, any pushback up into the 09 on the first go is likely to be a selling opportunity. Last week ended up putting a higher low in, but we're about to break that. So we have a break in the daytime framing, a break in the weekly time framing. And what are we looking at in terms of major targets? 39.45, which is again also a fib. 39.48.45, 38.48.45. 39.30 is major, and then we start to work our ways down into the 37.90s down here. Okay, so we got a gap to fill down here. So this is just please always keep the big picture in mind. Just keep looking at the story, and if necessary, play it back, either through replay or just look at the bars and how they form. Tell yourself the narrative. Okay, looks like we opened higher, tested the prior range, tested the prior high, 38.88 and a quarter, and we ended up closing and finishing at 39.09 on this day. That's the narrative of that day. What did it do next day? Next day, it opened inside the mid at the mid of that prior day's range, closed at 39.09. What did it do the day before that? It opened at new all-time highs right here, tested all the way through to the prior week's point of control, a high volume node, and end up finding buyers in what looks like a rejection of selling back to 39.09. Good. Okay, got it. And then this day opens in the body of the prior day, inside day. You can see it's an inside day, finished at 39.09. Okay, now we have something that has coiled incredibly tightly, so expect imbalance. And then the next day, we open at the mid of the prior day, and we have our imbalance up to 35, and so on and so forth. Tell yourself the story, tell yourself the narrative, because it's the narrative that tells us that gives us a sense or gets us in the flow of what it's likely to do next. Things happen in streaks in nature, and generally you can get a good flow of what's going on by simply replaying. If there's one tool that has been instrumental in setting up prop traders or training any trader, it is the replay tool. If you replay things enough, you can almost sense what it's going to do. Your mind starts to arrive at conclusions that the logic can't pick up sometimes. So this is where we are this morning. We're below the last 2 weeks' lows. So any rally today is suspect. Now, let's not take that out of context, and let's just emphasize that it doesn't mean that we should sell and there's not going to be a rally. It doesn't mean that at all. It just means that for structured trades, you're likely better off leaning on the short side. So let's turn on the stock zone levels here and get down into the business of what we expect today. So here we are again. You can see there's quite a bit in this area, so I'm going to shift the scale up, expand a little bit. This is the target that I'm keeping an eye on right here. This is the big one. Okay, 38.30. This is the next major balance area below. The area above there is 39.45. So 45.30 have to be outlined here. Other than that, we are looking for, because we're opening in a gap down, we're gapping below the prior week. The expectation is responsive buying. The inventory right now is the overnight inventory. Let's take a look at what that is right now. See if it has shifted. 68% short. Expecting responsive buying. I'm not looking for it to push through the 88 here. The 88. Remember the 88 and the 80 from last week? 88, I'm expecting it to push back up into the 80. This is the 80. And then I'm looking for it to fail through and start making its way lower. It's got a lot to tangle with here. The 53.50 area. This is 53. Oops. 50. It is Monday after all. Looking for it to chop. But overall, I'm looking for it to test the 45 and then eventually this week get down into the 30. We're breaking out of balance to the upside. Pretty tight balance at 39.09. Pretty well formed balance. And the next major area to test is 38.30. So that's scenario one. Scenario one is not expected to move that far. Not expecting it to go crazy today. It is a Monday after all, the lowest volatility day of the week, statistically speaking. Secondary, we open up, go sideways, start to shift down, and then consolidate in this 62 area, and then just hold steady and not go anywhere. There's going to be several attempts to buy, to push up and buy, but my guess is it's not likely to get anywhere. Because we're opening in a gap, we do have a third scenario, as all gaps have a higher probability of a third scenario, which is open, test down, impulse up, drive, consolidate, and then squeeze. The big short squeeze the shorts back into 3,900 before settling somewhere up here. So in this case, you got 98.50. Man, can't write this morning. 200. That would be the next key area up above for scenario 3. Today is likely to see some movement. It's a good day to just be very attentive at the open. I'm going to be glued to my seat to see how this thing plays out. Good luck, and I'll catch you tomorrow morning. Take care.